Before even Putin's army invaded Ukraine, the global economy was straining under a range of burdens like surging inflation, tangled supply chains, and increased interest rates, but after the breakout of the war these crises have been magnified. And there is a great underlying economic threat in front of us, if we do not do something to stop this war. In this video we'll talk about how the Russia-Ukraine war will impact you, and the whole world's economy. Let's dive into it.
Постоянно и публично заявляет о нежелании выполнять Минский комплекс мер по урегулированию.
Now beginning to give insights into operations in Ukraine. Inevitably, their coverage features advance
than the US this year, and even places like Europe and emerging markets, despite all the things that are going on in both.
As Russia's military assault of Ukraine is underway, Germany's top diplomat put it in.
Ukraine happen or other events that might come up in the near future like that.
Reality is complex. In the span of just a few days, the global economy has seen its worst phase while Russian army battling in Ukraine, and unexpected financial sanctions rocked Russia's economy, and threatened to fuel worldwide inflation. The price of oil has gone more than $110 per barrel, and is highest in the last 10 years. At the same time, weight on the supply chains, still laboring from the pandemic, rose as the United States, Europe and their allies have put sanctions on Russia's financial transactions and froze hundreds of billions of dollars of the central bank's assets that are held abroad. These sanctions have ruined the daily budget of a common man, and now even the people of Russia are desperate to either leave the country, or throw themselves into a vicious cycle of loan and interest rates. Because of that, a greater number of people are applying for loans, and with low liquidity in the Monetary Reserve Fund, the government is forced to increase the interest rates on the principal amount, leaving the investors and lenders vulnerable. All these prohibitions have caused inflation in Russian elites, and their currency ruble has hit a new low of 110, losing 20% of its value against dollar in the last 7 days. This has resulted the Russian stock market to go down by 50% in just one day, and eventually closing the exchange till further notice. This market breakdown of Russia has also impacted the European share market, and the US share market as well. The CAC index is down by 10%, and Dow Jones is down by 9%, with Biden and NATO doing nothing to stop the war. But you might wonder why the Russia-Ukraine conflict is affecting the European and American markets. See, market knows no borders. Wherever there is conflict or instability in the world, the market reacts in a positive, or a negative way. So, you might be thinking that the market breakdown is temporary, and it is a good time to invest in the market. But hold on your genius mind there, because this crash could be the biggest one in history. Foreign leaders have frozen the assets of Russia's central bank, limiting its ability to access $630 billion of its dollar reserves. The US, European Union and UK have also banned people and businesses from dealings with the Russian central bank, its finance ministry, and its wealth fund. Russia has also been banned from the SWIFT banking system, which has delayed the payments to get exports of oil and gas. Many companies like Apple, Meta, Coca-Cola, McDonald's, Adidas, are cutting the deals with Russia, resulting their share price to go not up but down. Not only their shares are down, but also, they are losing multi-billion dollars in revenues every day. The crash is not limited to the financial and money market, but it has also impacted on crypto as well. Bitcoin fell to its lowest price for a month, after Russian forces began invading Ukraine. The world's largest cryptocurrency fell 8% in a day, as well as rivals Ethereum, Solana, and Shiba Inu all fell as much as 10%. The impact of war in Eastern Europe saw $160 billion wipe out from the crypto industry in just 24 hours. While crypto prices had been recovered toward the end of this week as traders came to terms with Russian sanctions. However, these latest measures could trigger fresh volatility, with commodity prices been high, and inflation fears rattling investors in recent weeks. Rush for safe investments during the ongoing market volatility triggered by Russian-Ukrainian conflict has pushed global gold prices higher. The fears of supply shortages along with high demand have kept prices higher. Besides, sanctions on Russia, which is a major producer of gold, is expected to reduce supply. MCX gold prices increased sharply by 4.6%, and the spot gold prices increased by 4.3%. Geopolitical tension, sanctions over Russia as well as sell-off in equity markets, and depreciation in currency, will continue to increase the price of gold in the coming few weeks. With more than 3 weeks since the war broke out, Russia is continuously attacking Ukraine and capturing its land, but Ukraine is standing alone, refusing to surrender. The situation has gone from bad to worse. More than thousands of soldiers are dead, and after spending billions of dollars on war, Putin lost it but still claims to win it. But at this point of time, we have to accept this brutal truth, that if Russia stops fighting, there will be no war, but if Ukraine stops fighting, there will be no Ukraine.